Hello traders, I'm Luke from Disciplined Trader. This video is part of the Trading Basics series, and in this one we will be looking at trading plans. We looked at trading strategies in the last part, and really a strategy only covers one part of your overall trading approach. There are other aspects that you should have at least given some thought to and are typically included in a trading plan, which we are going to discuss in this video. As mentioned, a trading plan builds on what we covered when looking at a trading strategy. Your strategy should give you a set of rules that enables you to identify high probability setups on a repeatable basis if followed correctly. The goal of your strategy is to give you an edge in the long run so that over a good sample of trades you make a profit. A trading plan includes your strategy, but that forms just one part of it. For me, a good trading plan covers other aspects of your trading approach, such as risk management rules, markets you'll be trading and when you'll trade them, and even things like how you are going to track and improve your trading performance. There aren't really any hard and fast rules on what should be included within a trading plan, but I want to go through some things that I think are good practice to include. Typically, trading plans are made or reviewed on an annual basis, and so I think the first thing to set in your plan is your trading goals. These can come in all shapes and sizes and should be used to help you stay motivated to implement the rest of this plan. These can really be anything you want them to be. You could have an aim of reducing the amount of work you do in order to trade more, or even move over to trading full time. They could be monetary goals, or even educational goals. I find it best to set short-term and long-term goals, with the short-term goals being small steps towards that main aim. The next thing I definitely think you should include in your plan is your risk management rules. This is as important, if not more important, than your trading strategy in my opinion. We have already covered risk management strategies in this series, so you should be familiar with what these are by now. If you missed that video, I'll link it in the cards in the top right corner and in the description below. But essentially, you want to specify things such as how much of your account you are willing to risk on certain setups. For example, you may be willing to risk up to 2% on a certain setup type, but only 0.5% on another setup type. You may also want to set a maximum loss for the day before you stop trading completely. This might be 3 full position stop outs at 2% risk, for example. This means that if you are ever down 6% in one day, you close the charts down and come back the next day, or even take the next day off. Rules like this help you stop from blowing up an account whilst in an emotional state of mind. They also protect your account from any natural drawdowns that occur just through the correct implementation of your strategy. Unless you've found that elusive crystal ball, your strategy will not win every time, and so you need to make allowances for this so that your account doesn't suffer too much in the periods of drawdown. Again, refer to the previous video for more details on this topic. Another thing you may want to cover in your plan is what markets you'll be trading and when. This may be restricted to markets you've backtested only, and so more markets will become available to you as you complete more and more backtesting, should the results show that the market is worth trading, that is. You could also specify certain times you'll trade the approved markets, for example only in the morning hours between 8 AM and 11 AM when the volatility tends to be a little bit higher, or time slots you've found your strategy to be more effective. Another area to give some thought is how you plan on growing your account. This could be through reinvesting profits or by adding money from other saving methods. This could be particularly pertinent if you plan on making regular withdrawals from your account, as you'll need to ensure that you are not taking more out of the account than the account is making. Backtesting should be something that you continue to do, and so I think including it in your trading plan is a great way to keep tabs on what you want to test and how/when you are going to do it. You may have some ideas on how to reduce stop loss sizes on certain setups or find new methods of reaching some bigger targets. Afford yourself some time each week, every 2 weeks or every month where you can dive into these backtest projects and potentially make improvements to your strategy. And not only does doing tasks like this regularly help you improve your strategy, it will also help you implement it in live conditions, as you'll be getting some extra hours of practice in whilst you backtest. A good follow-on point from this is furthering your education. It doesn't really matter at what point you've got to or how long you've been trading, there is always more to learn. Set out a brief roadmap of the topics or aspects of trading you would like to investigate further. This could be new analytical methods, fundamental methods, or simply learning more about other traders. There may be a few books you've bought, courses you've enrolled on, or seminars you want to attend. Just set some simple goals that you would like to achieve over the course of the year and map out how you will achieve these. One aspect I think is overlooked by newer traders is recording your trades and analysing what you are actually doing. Not only does this give you the option of forward testing the strategy you are using to build more data on it, but you can also reflect on your performance as a trader. You can look at how well you have actually implemented the rules of your strategy. Are you taking profits too early? Holding losing trades for too long? Are there other habits or issues in the background that are affecting your performance? These kinds of flaws can be identified through journaling of your trades. Once you know what common problems you are running into, you can then start to put plans in place to fix those issues. However, this can become very slapdash and unstructured if it hasn't been given any pre-thought. Knowing how you will record your trades and other information is something you should decide on beforehand. I've made a free Excel journal that you can download from the Disciplined Trader website if you don't have one to use already. I'll link the explanation video for it in the cards in the top right corner and in the description below if you're interested. Your journaling doesn't have to stop at simply recording your trades you have taken. You could record all your trading activities. This is also one method of keeping yourself accountable. You can periodically reflect on what you are doing and compare that against the aims and goals you stated in your trading plan to see if the two are aligning. Some people find it more beneficial to be accountable to another person rather than themselves, as it can be easy to go easy on yourself. If so, ask your partner or a friend if they wouldn't mind helping you out. Tell them what you want to do and how you want to do it, and check in with them periodically so they can assess your performance. Alternatively, you could join a trading community and ask the others within that community to play this role. I'm positive there would be someone else who would appreciate the same service in return. So to summarise, your trading plan really can be whatever you want it to be. The overarching goal of it should be to give you a framework of how you want to approach the market and progress as a trader, and that can include as many or as little aspects to it as you feel necessary. This is your trading plan and it needs to work for you. So that wraps up this video on trading plans. I hope you have found it useful. If you have enjoyed the video, please feel free to leave a like on it. If you have any other questions or want me to cover any other topics in future videos, please let me know in the comments below, and also subscribe to the channel for more videos like this one. I will be continuing this Trading Basics series to provide new traders with all the knowledge they need to get started. Thank you very much for watching, and I hope you all have a good trading week.